Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day, all. Ira Epstein of Linn & Associates with your metals market update, and this is for Wednesday, the 2nd of August, 2017, just after 2:10 p.m. Central Daylight Time. So, since the market got its settlement price in the gold, it has actually sold off probably about $4 or so. It's going to close tonight in the 1277 level, and it has been selling off as the dollar's been recovering. The dollar was near the lows of the year, 92.39. Those are new lows for the year, as the euro made a new high for the year, and we've had a little bit of a swing in the two. Okay, some profit taking, but more than that, what I think's really going on is the markets are in that funny time frame right now where they got to figure out how do you want to position yourself for Friday's non-farm payroll. We're going to get, of course, we get our ADP numbers, we get the ISM numbers, we get a whole slew of information at the beginning of each month, and that's going to weigh on the market. Do we think interest rates are going up? Are they going to sit pat? What are they doing? That's going to be all important. As you by now know, it's been all over the news that the rally overnight and through the morning in Apple carried the Dow over the 22,000 level. But once it did that, it was more fanfare than anything. You fell back 100 points just like that. You've had trouble all day long in holding any type of gain in the Russell 2000 as well. But when I come to the gold market, on the weekly chart, and I did cover this in the report, and I finished my gold report, so if you want it, stay tuned after this because you'll find out how you can get it. And I cover this chart as well. You're caught in between 1295, 1205, let's call it, and the market's trying to figure out what to do. It has upside bias because it's over the 18-week moving average, but so far for the week, the market's also down $1.40. When you go to an area chart of closes, you had your best close just recently, and that was yesterday when the market closed at 1279.40. You can see that. Today the market's at this point giving some up, but not as much as you'd see there. As I said, the settlement price is going to be pretty good. When we look at a December daily bar chart, we had an outside day up and now an inside day. If the market takes out yesterday's low, I'd be concerned that you are laying on this chart the potential for a bull trap, and that could drop the market back down. The support today showed itself up in the 1270 area, and as you can see when I put the swing line on, you really don't want the market under 1268.40. That would be ideal not to take out, and if you can resume the uptrend and get through these highs here, I think the market might make a run at the upper Bollinger Band. What also was taking place is as this market has had this rally, the laggard 18-day moving average of closes is starting to gain on the 100. Now, it's gaining if we look at it each day. Today's 1251, 1248 yesterday, 1245 the day before. So let's use about an approximate $3 a day. That puts this market getting up to that number if this were to not have a big break in it, probably by early next week, where you'll get the two numbers approaching each other. Give a big break in the market, and you just might come up a little bit and skin it and turn back down. It's an important zone that we're in. As I said, if, and this is an if the market's going to keep its upside momentum, you still have the upper Bollinger Band as a potential target, and the market does have the embedded reading, which is the most powerful of my signals. Now, a sign that the market would be in big trouble of losing all this upside momentum right now would be if prices closed under 80. I can tell you that seasonally this is a strong time for gold right on through all of September. So you got August and September that are typically strong months. They don't have my GLD or this chart fixed yet, and I've been doing a lot of bitching and screaming. They know what the problem is, and it's the data feed on those two, and I'll just wait until they can fix it at the vendor. I'm not the vendor. When we look at what the market has done, also on the gold-silver ratio, It came down, and now we've got 2 days where the market has gained back. It's also questionable. I have to look at the close today. Is it still in a down thrust? I doubt it. It's probably entered a small period of an up thrust, and this level, until it's taken out again, is going to hold silver back from gaining on the gold. You can see on the chart here that you're having an outside day down in silver. You had the best gain of the whole market. You were unable to make a run up to the 100-day and the 18-day averages at the 1701 level, and you're faltering and having an outside day down. However, countering that, you do have the embedded reading. And until that's lost, this is noise in the market to me. Important noise, but noise. This is the leader. If you lose that embedded reading and it closes under 80, well, you're probably going back to the 18-day average. Don't do that and turn this thing around or hold it steady. Take out today's high, which is the high of an outside day down. My next targets are these two numbers. So it's an important day for silver tomorrow. In the copper market, still an embedded reading, still holding the pattern of higher lows, higher highs. Until it's over, folks, it ain't over. This is still very much a bull market. It is a market that until the red line closes under 80, I say the pros buying, and I see them buying on these breaks. In the platinum, you are now up to a zone between the 100-day average and the upper Bollinger Band for the past 3 days, where you're getting some price distribution. You're not embedded. I still say the pros are coming out. They're not adding to positions. I think they're dropping positions. And I see the same thing happening in the palladium. That doesn't mean price can't go up on it. It's the degree and the momentum that gets lost in the market when this occurs. The trend is clearly up, and on breaks it can correct itself and keep the trend. But this is something I do pay attention to. Now in the dollar index, you're still down on the day. You have a fully embedded reading, and look, it just keeps making lower lows. This thing embedded back here, and it's ridden that Bollinger Band. Inevitably, the dollar is going to get oversold. I cannot tell you when, where, how. Not interested in that. More interested that until it loses this reading, rallies are still selling opportunities. And that's how I think you have to view the market. Now, I have completed my gold report. I already know what I said. I know what I'm talking about in it. I've already got positions on from it for my subscribers. They already put on whichever way that I'm thinking. And if you'd like to know how I'm thinking, well, it's time to get the report. As you know, on my last report, which I wrote on June 17th, I gave you the long-term analysis. This one's all about the shorter term, narrowing into the next 2 months, basically, as to what I see going on, and really more interested right now in the daily action. Call my staff to get it. It's really simple. They'll get it out to you. You can also go to our website. You can sign up for things there. You'll see our carousel of free offers. You can watch me on YouTube. I'm right up there. And underneath us on many websites, it says, click here for Ira's free information. Do it. We'll get this all in your hand. I'm Ira Epstein. You have a good day, and I will talk to you all later today in my financial market update. Take care.